Welcome back. Down 35 points on the Nifty. The Sensex lower by 137 points. It's a cut of about 0.2%, but again, not bad compared to the weakness that we are seeing across the rest of the Asian market. Though from the top levels of about 17,700, we have seen a bit of a fade off of the rally. But let's get you some brokerage calls now. The first one is Bajaj Finance. The stock is down 2%. In fact, is one of the top Nifty losers today. There is a note coming in from Ambit where they say that the stock price and the valuations is currently pricing in very high growth over the next 10 years, which according to the company is very difficult to achieve. Abhishek is here with the rationale on this sell call. Abhishek.
Well, Ambit has initiated coverage on Bajaj Finance with a sell rating and a target price of 5,028 per share. They say that on a one-year forward valuation implies that 25% growth will be seen in AUM with an around 20% ROE for over the next 1 decade. So they say that despite superior technology, analytics, processes and distribution, this is a tall task. So no Indian lender has grown above 20% for 2 decades in a row. So competition from banks is also increasing in pockets like MSME as well as personal loans. Now, home loan growth would be ROA and ROE dilutive given the fact that it is a low net interest margin profile business, and liability scale up would be a challenge as an NBFC due to various regulatory caps that are in place. So banking license is a solution. However, this would compress the ROE or return on equity to around 15%. So they expect slowdown in loan growth and net interest margin compression to result in AUM growth or ROE tapering down to less than 20% from FY25, which would result in derating of the stock. Back to you.
Abhishek, thanks a lot for getting us all of the details. That's on Bajaj Finance. It is down over 2% right now. Some important information that we're picking up as well from our sources that is flashing on the bottom of your screen. We're learning that IndusInd Bank CEO Sumant Kathpalia's term will be extended and will be extended by another 3 years. That's what we're picking up. We will get you more details on this as well. But another stock that we're tracking right now is Bajaj Auto. It is actually one of the top gainers on the Nifty. This after 2 brokerages, that is JP Morgan and Motilal Oswal, have talked about aggressive scale-up of the electric vehicle business. So Sonia is here with all of the details on this one. Sonia?
Well, thanks a lot for that. As you rightly pointed out, brokerages are very bullish on the scale-up of the electric vehicle business for Bajaj Auto, a couple of new launches as well. And they also talk about how the worst of the export weakness may be behind them. So first, let me tell you about JP Morgan. They have an overweight with a target price of 4,400 on the stock. They talk about how the stock could re-rate in 2023 because of the aggression that Bajaj Auto is showing both in 2-wheeler and 3-wheeler electric vehicles. Now, in the 2-wheeler electric vehicle space, they're looking to ramp up the Chetak volumes to 10,000 monthly run rate compared to about 3,000 to 4,000 currently. On the 3-wheeler space, there's a launch of an electric vehicle 3-wheeler coming up in April. It has been delayed up until now, but now there's more clarity that the launch could come through in April itself. Exports are likely to bottom out and the domestic 2-wheeler recovery has also begun. JP Morgan also talks about how the risk reward is in favor of investors because the valuations look quite attractive at the moment. The stock is trading at 13.4 times FY25 earnings, which is at a discount to its historic multiples. Motilal Oswal also put out a note where they met the management and they talk about the EV scale-up as well. They say that over the next few months, the company is making its entry into the Brazilian market and the upcoming Triumph launch will also be a big growth driver for them. Now, the Brazil motorcycle market is 1/3 of the Indian motorcycle market in terms of revenues, and the upcoming product launch in the cruiser segment from its alliance with Triumph will plug the gap in its product portfolio. Also, they have an aim to reach 17 to 18% market share in the Brazilian market itself. So all of these are triggers, positive triggers for the company, and that's why the stock is the biggest Nifty gainer today.
Thank you very much for that 1.3% gain coming in on Bajaj Auto. Let's talk about IT now. IT is on the back foot today. And one of the reasons is that Nasdaq, of course, slipped about 1.25%. So that has a rub-off impact on Indian IT. But there is also an interesting note coming out of Jeffries on the Indian tech space, which I'd like to highlight. They're basically saying that the top clients of Indian IT companies, their revenue estimates have been coming down. And historically, there is a very high correlation between the revenue growth, the profit growth of the top clients of the IT companies and what the Indian IT companies end up reporting. There is a very high correlation. According to them, it's close to about 84%. So when your client performance, client financials start deteriorating, it's bound to have a rub-off impact on the Indian IT companies' growth financial. And that's why they're saying there is a possibility that consensus estimates of Indian IT companies could face further pressure from current levels. According to their analysis, Coforge, Wipro, LTIMindtree, these are most at risk. So basically, Jeffries has analyzed the top clients of all these companies, and based on their analysis, they're saying Coforge, Wipro, LTIMindtree at most at risk. Infosys and TCS are better placed. So their top clients are not showing a weakness in financials. In fact, their metrics appear to be improving. So they're okay in Infy and TCS. Tech Mahindra's expectations of growth matches what we are expecting from the top clients and the consensus estimates over there. So it's evenly balanced. But on the subject of valuations, they're saying that while Indian IT has corrected from its peak valuation multiple, it's still trading at one standard deviation above its historical averages, which means it's more expensive than what it historically used to trade with. It's now trading at a 26% premium to the Nifty versus an average premium of 11%. But according to them, TCS Infosys valuation premium may sustain because if things go south, Infy and TCS are better placed. There is a flight to safety given a recessionary environment. But amongst these two, their preference is for Infosys. So basically what they're trying to say is the top clients of the IT companies, and these are all global clients, right? They've analyzed the financials and those appear to be deteriorating and consensus expectations of their clients is coming down. So therefore, they fear that IT may also see some downward revision in expectations.
Okay, 0.7% of a lower tick is what we are seeing on the IT index today. We'll do one thing, we'll slip into a short break and we'll get you more on the IndusInd Bank story on the other side with Lata. Stay tuned.
ए लड़की तेरा नाम